Thanks, everybody, for coming to the panel. Here, the fireside chat with Andy from FTX. I met Andy a couple months ago, 2 months ago. I had the pleasure of going to Taipei for the Asia Blockchain Summit. It was an awesome conference. Really learned a lot. But for me, the highlight was a random encounter I had with Andy and the rest of his team over lunch. And I really thought that these guys were onto something really special. So we've had multiple conversations post and it's great to be here in Tel Aviv, doing this fireside chat, Andy. So just for a little context, why don't you help tell the people, give them your background before FTX?
Yeah. So I used to work in the options space. I worked at a company called Croghan International Group. They're fairly large market makers and liquidity providers in options. I was personally involved in crypto as a hobby and as an enthusiast. And then when Susquehanna started trading crypto, a bunch of guys looked around and said, who knows how to even send crypto anywhere? I was able to step in there and help out along with a couple other of my colleagues. And that's really what started the connection between my hobby of crypto and my career of finance. I was lucky enough to work there for a number of years. I made the jump to Alameda Research about a year ago, like 2 days ago, actually.
Yeah, and so in Alameda Research, then he got FTX.
Yeah, Alameda Research itself is a liquidity provider in crypto, quantitative trading desk, large OTC provider. A lot of the same strategies and backgrounds for quantitative traders, both on the Wall Street side as well as based out of Silicon Valley. We had a pretty potent combo of basically just a bunch of former Facebook and Google guys and a bunch of Jane Street and Susquehanna guys. And built out, a trading desk where we traded a lot of derivative products, a lot of coins. We trade everything. It was kind of a crypto enthusiast's best dream because you could be involved in pretty much every project. You're thinking about the whole space all the time. It was really a blast. And FTX was kind of born out of the experience we had trading on different platforms. I'm sure everyone here who's traded on any platform knows that there's a lot of intricacies and differences between them all. And we were just kind of thinking about what we liked as a large trading firm and what we liked as just crypto enthusiasts. And we thought that there was something that we could do to build a product that didn't exist yet. And so about 9 months ago, we dreamt up FTX as the next generation crypto derivatives exchange to compete with a lot of these crypto exchanges that you're probably familiar with. Huobi, OKEx, BitMEX, Deribit. Places where we trade a lot, and we know those guys really well, and we know those products fairly well as well. FTX launched about 4 months ago. It's going pretty well. Grown a lot, obviously, because of great guys like yourself helping us out, and chance encounters and meeting people. Like you said, it was kind of just a blessing to meet you in Taipei. It was a wonderful conference.
So why don't you talk about some of the products that you guys have that are really unique to your platform?
Yeah. So. We decided there were a lot of things that were just missing from this space. One of the obvious things was index futures. These are products that are extremely popular in traditional finance, along with leveraged ETFs and things like that. So the first thing we did is we created indices to reflect people's desire to produce opinions on particular groups of crypto. So in that sense, we have an alt, which we call it ALT, which is a basket of the top 10 cryptos, which all trades in line with the weighted average of those. We have a mid tier and a small tier. So those are all what you'd expect. Mid is about 10 to 35, depending on which coins they are. Obviously, you don't put things like stable coins in there because you don't want that doesn't make any sense.
That decreases the volatility.
It does. It would decrease the volatility, but it's probably not what people want when they're trading that. So this is a way that people we had large funds come to us, or maybe people like yourselves who want to be able to say, hey, I want to put an opinion down that I think alts are going to do very well, and I think Bitcoin's going to suffer, or vice versa, and I want to put on this position. And you could see people were really into that when 2017 was there was a lot of people who wanted to express an opinion on the particular markets. So we just thought that these were things that people wanted. People use them in traditional finance, and as this space grows and matures, we're just going to see things that have already been paved and already been decided in other industries are going to come to here. And we saw ourselves as the agent to bring those things in.
And why don't you talk about your leverage tokens in particular and kind of the aspects about those that are unique?
Yep. So we did launch something called leverage tokens, which are tokenized versions of margin positions. So right now, if you wanted to put on a large margin position on an exchange, you have to manage margin and collateralization, and you might go to sleep and you wake up and you got liquidated or something like that. And in traditional finance, there's these there are leveraged funds as well, where you basically don't have that exposure. When you buy this token, it uses the funds to rebalance the net asset value underlying to rebalance to always be at 3x leveraged. So when you buy we call them bull and bear. So BTC Bull is a token that moves up $3 when Bitcoin goes up $1. And bear goes also up $1 when Bitcoin goes down, or goes up $3 when Bitcoin goes down $1. So these are tokenized assets that you can actually move around and trade on other exchanges. You don't have to worry about your margin. You don't have to worry about collateralization or liquidations or anything like that. Everything's kind of handled behind the scenes for you. And these are extremely popular products in traditional finance. This is like the biggest retail product for traditional finance, 401ks, Roth IRAs, things like that in the United States. So it was just one of these obvious things that we thought that for the crypto space to mature and to really give product offerings that people demand already in other places, this was just something that we wanted to do.
And so now you've been open about 4 months. Yep. So kind of what lessons have you learned? What's different than what you thought it was going to be?
Yeah, so we went from my background is obviously on the proprietary trading side, and then running an exchange is a whole different business. Your number of customers goes up 1,000x in a few weeks, and also it's about figuring out what works for everybody and not just what works for you. A lot of times projects or trading teams only focus on one particular thing, but if you're building a product that you hope the whole industry uses, like you need to build a product that the whole industry actually can use. So you can't just build something that's only good for one thing. And that's why we have a slew of products that we're trying to offer, and we're pretty open about it, about delivering on iterations of what people want. Like again, the entire genesis of this exchange was because we thought there were things missing, and we've been pretty good to roll out fast features. We're going to be listing some more exotic things in the future. I can't confirm anything because there's still hoops we have to go through, but we're looking into things like hash rate swaps for mining hash power.
I think that sounds super cool,
yeah,
right?
I
mean, that's
think so too.
The miners would love that.
That's the thing. It's like we have a bunch of miners that we talk to. They're like, "Can you please give us this product?" And the answer is, I think we're going to find a way. It's really just about making sure that the trading mechanism is like prepared for such a thing, and it's smart. It has a smart design to it, because it would be the first one in the world that really pulls it off. You got to be careful, and you got to make sure that you're listing a good product. But things like that are on our radar. In fact, we are in about 2 weeks. We're launching a product called Move, which is equal to the absolute value of the next day's Bitcoin move. So you can basically trade what's essentially volatility on the next 24 hours. So if Bitcoin goes up $100 tomorrow, this contract expires to $100, and you can either bet against it or bet on it that you think Bitcoin's going to go up or down in the next day.
So you guys are located in Hong Kong. Why is that?
It's because it's pretty interesting. There's these pockets of crypto across the world, right? Obviously here being one of them. And for the United States right now, it's a little dicey as far as regulation goes. For us to list a lot of these products, we weren't able to, stay in Alameda. So I moved out of California to Hong Kong a few months ago. And Hong Kong and Asia in general has like a large amount of crypto going on right now, as you remember from Taipei. That tends to be where a lot of the larger institutions are setting up shop. Obviously, notwithstanding all the other political things going on in Hong Kong right now.
Yeah, the challenge is there as well. So can you also, for people, help give people context into how big derivatives is in crypto relative to the rest of the market?
Absolutely. Derivatives are a surprisingly large portion of crypto volume right now. Obviously, people know a lot of the large spot exchanges, but sometimes these places like BitMEX and Huobi are doing like 3 to 4 billion a day. And that's just, it's massive. And if you're not involved in the Asian trading space, you might not even know about OKEX or Huobi that well. Like a lot of the U.S. counterparties, Susquehanna, when I was there, we didn't know, we couldn't tell the difference between what was real volume and what wasn't real volume. So it's tough. It's really important to try to figure out, where all the real derivative volume is, and derivatives are just massive. And who knows, with options around the corner, people are starting to rumble a lot more about options trading. And I'm sure we'll see that come in the coming months.
And geographically, can you talk about your business and Asia as a region? Do you have much outside of Asia and within Asia, kind of by country? Does one country dominate or?
Yeah, obviously China's quite a large piece of the crypto puzzle right now. But like I said earlier, there's a lot of really interesting pockets of really important crypto, just crypto industry. Hong Kong tends to be more on the financial side. I mean, Tel Aviv is probably the biggest for the technology side and the security side. There's a ton of development that goes on here, a ton of research that goes on here. Then you have places like London has a surprising, commodities angle there, and obviously the United States there's bigger institutionalized desks, but those tend to be the spot products. But there are things around the corner like Bakkt and RSX and things like that are launching more structured futures. But it's pretty unique how each geographical region is kind of focused in on what really makes them elite and what they can really bring, and that tends to be based on other things that the talent pool in that area does. Like I said, in finance, there's a bunch of financial people in Hong Kong, and the developing and the research scene here is massive, even outside of crypto, right?
Yeah, I mean, you talk about the talent scene though, but a lot of talent is coming from outside of Asia, right? I mean, how many of your team are Americans?
It's true. You will see a lot of people from all around the world, going into both Hong Kong. I mean, Singapore's big. Obviously, Korea has a large presence as well. It's an international business right now. There's the whole community. It's global, and you're kind of just seeing the same mentality. It's you're not going to stop it, so people are going to figure out a way to build what seems inevitable, right? So there's a lot of people who are young, people who don't hesitate to move across the country, right, or move across the globe right now. It's fun. It's a good community too.
Can you talk about the competition? Are there many different exchanges?
Yeah. Right now, there's a bunch of exchanges.
Or derivative exchanges.
Derivatives exchanges as well, and a lot of people are launching them. I mean, Bitfinex is launching their futures exchange. Maybe they did it a few weeks ago. Binance is launching Binance futures. There's a lot of competition right now, and it just shows that everyone's kind of realizing that that's where the world is moving, as far as the trading side of things go.
Are you guys fighting over a pie, or by when they enter, are they growing the market?
I don't think it's a zero-sum game at this point. I think it's kind of the rising tide floats all boats right now. I think that better products, better projects, I think everyone wins to that. I think that it's not just on an exchange level too, on a coin project base, on a product service base, everybody wins to more people entering the market. And I think it's kind of a no-brainer that everything's going to go just more flow and more market share is going to grow here. Right now, all of crypto is, as far as an economic, a market, it's smaller than single companies on listed exchanges, like Apple, right?
Yeah, it's a fraction of Apple.
It's a fraction. That's what I'm saying. So it's there's still so much more for everyone to gain on this. There's still a lot of upside. There's still a lot of room to go too. A lot of maturity that's needed.
Yeah, I mean, it's obviously a very new market. So as you guys are looking at, I mean, what do you see the derivatives, market being, in the short term and in the long term?
Yeah, so I think on the short term, it's more about building good products. I think that right now it's pretty easy to disrupt a space if you can design something that doesn't have obvious flaws and can quickly, make a name for itself. But on the long term, I do think it's really about adding to the total growth. It's generating entirely new market value and marketplace, entirely new marketplace. So I think in the long term, derivatives are the kind of thing that triples the size of crypto's volume and crypto's market cap, just because it just adds more value that's not there yet. You're not taking from anybody, you're just growing everything. And I think, again, everybody wins to that. It means more funding for projects. It means more services you can provide. It means more people involved in the market space. And better liquidity is better for everybody.
And, obviously liquidity drives, a large part of the market. Can you talk about kind of your experience in terms of how liquidity waxes and wanes, and what are the events that kind of cause that?
Yeah, so liquidity is really important in the sense that if you're a project and you have a ton of your token, and you need to have funds to run or operate. If you don't have liquidity, then maybe you can't even do that. Maybe you can't continue operating properly. Maybe you can't continue the research you want to do. And then you'll see as more people enter the space, liquidity just always tends to get better. There are definitely times where it gets worse for a short-term basis. It can kind of a little bit of fluctuation. But on the long term, the curve is all that liquidity is collapsing prices and giving customers better spreads. And that's healthy, and that's exactly what should happen. It's just better for everybody.
So, one of the things I like doing is open it up. If there are any questions from the audience, I know this is an interesting topic and probably pretty new to a lot of people, so hard to have questions. But if you do, happy to let the audience going once, going twice. Okay, I didn't see that.
Okay, so my first question is whether you think derivative products in crypto really have value for the average retail trader. And the second one is, if you look at the retail trading market for other derivatives products in Europe, the US, even Hong Kong, there's restrictions on leverage, restrictions on marketing. So do you fear that there will be some regulatory pushback on what you guys are doing?
So he asked about...
Yeah, I heard. Yeah.
So as far as like their use for retail, and as far as the regulatory pushback, I imagine that clarity will come, and there's a reason that those rules do exist. But I also do think that part of the spirit of this industry is not like allowing people to do what they want, and we see that almost all of this stuff is focused on what people do want, and we're more than happy to play along with regulation. I think that regulators are kind of dragging their feet in a lot of places. And I think that that's not good for the industry, but what is good for the industry is if people are demanding something, giving it to them. And, we obviously don't want to build a toxic product for anybody. I do think that you do need to be careful when dealing with things like leverage for retail. So we have a lot of educational products out there. We have a lot of educational material on our website. But frankly, this is if it's what people want and it's where the world's going, then we want to push along with it, and that's sort of our philosophy. And I think that's a philosophy shared with a lot of projects that are in this space, exchanges included.
And then he also had the regulatory question.
Oh yeah, and as far as the regulators go, like I imagine it will get to the point where there is clarity. It's probably going to be whenever the United States decides to start doing something, but because everyone's kind of waiting to see what they're going to do, and no one wants to come up with a bunch of rules and then to have the standard be set somewhere else, and then you have to unwind all that work. But that's probably more on the years time scale as opposed to months.
Hi, very interesting point of view. You cannot hear my question. Very interesting point of view. I would really like to hear your opinion on the off-chain, on-chain game of derivatives in the blockchain, and also in terms of the transparency, because some places like, say, BitMax may not be fully transparent, taking some data feeds which are unknown for price. And just want to hear what is your opinion on that, and also how do you see it rolling out going forward?
And by the way, can you introduce yourself so Andy knows who you are?
Sure. Yeah, I'm Omri Ross. I work as a professor for blockchain technology, but I'm also the chief blockchain scientist for Ethereal. And we released today open source, allowing you creating OTC and other derivative on chain. It's a true open source, no token hidden or anything.
Okay, and we're down to our last minute, so.
So as far as the transparency thing goes, I think that you're definitely right. There's a very, very strong need for transparency in this space. Black boxes sometimes aren't exactly where you want to put your trust in for unregulated entities. And I think that we're definitely aware of those shortcomings. It's not something that we can feel like we can really deliver on besides doing our best to build good community trust and building a good product. I don't know about how to build a matching engine besides just making all the trades public. We feel like we've done a pretty good job with that. We offer a transparency page on everything that we do. We publish research about what we believe to be fake and bad volume in crypto, and try to put out educational materials on how to identify when there's funny stuff going on. As far as the technological side of things, it's not exactly what FTX does, but it's certainly something that we believe is like a healthy part of a functional ecosystem, and in fact a necessary one. So in order to have something global like this, you got to have that layer of trust.
Okay, well, he was terrific. Let's give Andy a big hand.